like a disaster zone? Are you dreading tax time because your books are a complete mess? You are not alone. So many small business owners just like you pour their hearts into their work but let the bookkeeping slide. Today we're going to change that. We're going to follow the story of Dr. Emily Rivera, a veterinarian who transformed a full year of financial chaos into pristine, organized books. And by the end of this video, you'll have a clear, step-by-step blueprint to do the exact same thing for your business. Let's get started. Meet Dr. Emily. But when it comes to her finances, she'd rather face a grumpy bulldog. With tax time breathing down her neck, she finally decided to tackle one full year of messy books inside QuickBooks Online. This is where the cleanup begins, and it starts with solid preparation. Think of it like a financial checkup for your business. First, Emily gathered all the necessary documents. She downloaded every single monthly bank and credit card statement for the entire year. Then she collected all her supplier invoices, everything from medications to lab tests. Finally, she organized all the deposit slips from checkups, surgeries, and boarding. These papers aren't just clutter. They are the financial x-rays of your business. They tell the story of where your money came from and where it went. Without them, you're just guessing. With her documents ready, Emily logged into QuickBooks and went straight to the chart of accounts. This is the backbone of your bookkeeping system. She noticed a lot of clutter. There were duplicate accounts like vet supplies and animal supplies. She merged them into one clear category. She also found old, unused accounts from services she no longer offered. She made those inactive. The goal here is simple: create a lean, clean list of accounts. Why? Because a simpler chart of accounts leads to cleaner, more understandable reports later on. Next came a crucial step: separating business from personal. This is a non-negotiable rule for clean books. Emily made sure that her clinic's bank account was used only for professional expenses. No more groceries, personal pet supplies, or dinners out on the business card. Keeping business and personal finances separate prevents confusion and makes tax time infinitely easier. It ensures that every transaction in your business account is actually a business transaction. Now for the magic of automation. Emily went to the Transactions tab and then to Bank Transactions. Here, she connected all of her business bank and credit card accounts to QuickBooks. This is a game changer. The bank feed automatically pulls in every single transaction, the date, the description, and the amount. All the raw data is imported and ready for her to review. The foundation was set. With her bank feeds connected, Emily found herself looking at the For Review tab. This is Command Central for your cleanup. It's a long list of every transaction that needs a home. Her mission was to get this list down to 0. She went through each line one by one and gave every expense a proper category. For example, payments to pet med supply were categorized as vet medications. Bills from regional diagnostics became lab fees. Her clinic's rent and utility payments were assigned to overhead costs. Even those small charges from Square and Stripe for processing payments were correctly labeled as merchant fees. Next, she tackled the incoming money. Payments from her clients for services were categorized as sales income. But what about the cash she personally put into the business to cover some costs? She correctly labeled that as owner investment. When a supplier gave her a refund, that became refund income. And a small advance from the bank was recorded as a loan payable. Getting these categories right is critical for understanding your true revenue. If you're ever unsure about a transaction, don't guess. Emily used a smart trick. She placed any confusing items into a special category she created called Ask My Accountant. This way, she could keep moving and address the tricky ones later with professional help. To speed things up, Emily started creating rules for recurring transactions. Think about your monthly rent payment or your QuickBooks subscription fee. They're the same amount to the same vendor every single month. By creating a rule, she told QuickBooks to automatically categorize these transactions for her in the future. But she was careful. She avoided using the auto-add feature for vendors like Amazon or Walmart. Why? Because one purchase from Amazon might be office supplies, while the next could be a new piece of equipment. Those need to be categorized differently, so she reviewed them manually each time. Consistency is your best friend in bookkeeping. Emily made sure to use the exact same vendor name every time. For example, it was always Pet Med Supply, not Pet Med 1 month and Pet Med S. The next, she also got into the habit of writing short, descriptive memos for each transaction. like heartworm meds for May or repair for exam table. These little habits might seem small, but they make a huge difference. They allow you to search for specific transactions instantly and make your financial reports completely trustworthy. Now let's talk about income and making sure it's not counted twice, a very common and costly mistake. Emily created her invoices directly inside QuickBooks. When a client paid their bill, the deposit would show up in her bank feed. Instead of categorizing this deposit as sales, she used the match feature. This links the incoming payment directly to the open invoice it belongs to. If she had just categorized it as sales, QuickBooks would think she earned that money twice, once when the invoice was created and again when it was paid. This would inflate her income and her tax bill. To keep her receivables in check, this report shows her which clients still owe her money. If she saw a client on the list who she knew had already paid, it was a red flag that she forgot to match the payment to the invoice. She also looked for negative balances, which usually mean a client overpaid or there's an unapplied credit. She corrected each of these errors so her records perfectly mirrored reality. With everything categorized and matched, it was time for the final boss of bookkeeping, reconciliation. This is the process of making sure the numbers in QuickBooks match the numbers on your bank statements. It's the ultimate accuracy check. Emily went to Transactions, then Reconcile. She chose an account, entered the ending balance and date from that month's bank statement, and then started checking off every single transaction on the screen line by line against her statement. Her goal was to get the difference to 0. When the difference hit 0.00, it was a moment of triumph. It meant that every transaction for that month was accounted for perfectly. Reconciliation is powerful. It uncovers duplicate entries, finds missing deposits, and even reveals old checks that were written but never cashed. Emily repeated this process for every single bank and credit card account, month by month from January all the way through December. When she finished, her QuickBooks balances for each account were the exact balances confirmed by her bank. Her books were finally accurate. With the cleanup complete, it was time to think about compliance and reporting. She was required to send them a 1099 NEC form by January 31st, because she had kept her vendor list clean and collected W-9 forms from her contractors. QuickBooks could prepare and file these 1099s for her easily. This saved her from a major year-end headache. Then she ran the two most important reports for any business owner. First, the profit and loss report for the previous year. For the first time, she could see her true revenue broken down by service: exams, surgery, grooming, and boarding. If any number looked strange or unexpectedly high, next, she pulled up the balance sheet as of December 31st. This report is a snapshot of your business's financial health. Her bank and credit card balances perfectly matched her reconciled statements. There were no weird negative numbers or unexplained balances. She could clearly see her assets and liabilities, giving her a true picture of her clinic's financial position. Cleaning up a year's worth of books is a huge accomplishment, but the real goal is to never let it get that messy again. To stay on track, Emily adopted a simple, sustainable rhythm. She categorizes transactions weekly, reconciles accounts monthly, and reviews her reports quarterly. She keeps her chart of accounts lean and only uses rules for transactions that are truly predictable. And she knows that if life gets busy and the books start to pile up again, she can call a professional, like MDS Peace of Mind Bookkeeping, to get things cleaned up fast and keep her filings current. The chaos and guesswork were gone. With accurate books, Dr. Emily can now make smart decisions about her clinic's pricing, staffing, and future services. The clinic runs more smoothly. The pets are well cared for, and for the first time, the owner has a clear view of her financial health and true peace of mind. Thank you so much for watching. I hope seeing Dr. Emily's journey has inspired you and given you the confidence to tackle your own books. If you found this video helpful, please give it a thumbs up and don't forget to subscribe for more tips on simplifying your business finances. See you in the next video.